Hey guys, Estate Goose here. I have Jason Szeszen here with me. You didn't see that coming, did you?
No, didn't see it coming.
Jason Szeszen here from Trademark Financial, correct?
Yes, sir.
All right. So we're going to talk about the top 6 things.
Yeah.
6 things to not do when applying for a mortgage. A lot of these are mistakes that you probably see very often, right?
Unfortunately, yes.
So, and they're very easy to fix, very easy to prevent as long as people are educated and figure out what those are.
Absolutely.
So let's start with actually, you want to say something about you first?
Not much. I mean, I'm just, I've been in the mortgage industry for over 20 years. I deal with people with good credit, bad credit, and I mean, I'm always here to help people try and clean up credit a little bit. I mean, I'm not a credit counselor.
It was at this moment that he knew. He fucked up.
Applying for new credit, whether it's taking out a new loan, a personal loan, applying for a new credit card.
Correct.
Now, why could that actually, affect you throughout the process?
So the reason that it would affect you is, number one, once you get your credit pulled and you are in the application phase of the mortgage, you've been pre-approved, so on and so forth, your credit is now going to be monitored. Once it's monitored by whatever lender you're using, they're looking to see if anybody's checking your credit, and if so, they also have software that'll tell them whether or not you've actually received the credit. So if you were to go and do something like open up a credit card or get a new car loan or anything, a personal loan, student loan for your child or yourself, any of those things, it's gonna pop up on your credit as an inquiry and that you have received the credit. Therefore, now that goes into what's called your debt to income ratio. And basically what debt to income ratio is how much debt you are carrying monthly based off of how much income that you bring in monthly.
Which is the number that they use.
Which is the number that we use to qualify you, exactly. Okay. So in an instance where you say you took out a loan or a credit card, it actually could take you from being pre-approved for a mortgage to either not pre-approved or now you went from being able to, say, afford a $250,000 house to now you're down to $180,000.
Right.
So it definitely can hurt you.
Now, you said that you can see whether or not they applied and if they were approved for it.
Correct.
Now, what happens if they were not approved for it? Would it still affect them in any kind of way? I mean, the actual credit inquiry?
No, I mean, it's not going to necessarily affect them if they didn't accept the credit or anything like that, but they're going to have to get proof that they didn't take it out. So either a letter of denial from that company, and a lot of times those take a month or so to get. Yeah. So once again, if you're in the process, let's say you're looking to close in 2 weeks, and we find that you got a Home Depot card, Lowe's card, those are very common, or a furniture card,
right.
You went somewhere to like Raymore & Flanigan. You get one of those things, and now we see that you applied for it. If you didn't get it, now I have to see that you didn't get it in order to prove to the underwriter that it's not going to affect your debt to income ratio.
Okay.
So just try and avoid anything like that.
Right.
That's really what you want to
now,
do.
I guess this will be kind of part 1 as well, and I just thought about it. How about closing credit cards, which people think it actually could help them, but...
Yeah, that's another thing. I mean, when it comes to closing credit cards, a lot of people will hear, "Oh, you don't want to close a credit card because it's going to do something like
you're
it's going to hinder
missing out on that history."
Right, and it's going to hurt your credit, which it will. It can very much affect your credit score by canceling credit cards. What you don't want to do is you don't want to cancel it because if you, let's say you have a credit card or a line of credit or something for $5,000 and you're not using any of it, that shows that you have this. Right, you're responsible. You have this amount of money that is available to you that you don't utilize. So that actually, it's going to make your scores higher. Where if you start to cancel stuff, you will start to see your scores drop, and you don't want to do that. So while you're going through the process, just stay status quo.
Yeah, it's only 45 days, 60 days
Yeah.
max, depending on the product that they're using.
Absolutely.
So just be patient, right?
Yeah, absolutely.
All right, so number 2, which is along the same lines, which is credit card related, is maxing out credit cards. So now we're not talking about applying for new cards. Now we're talking about the cards that you initially had already, right. But now you maxed them out.
Absolutely.
Now, how can that affect you towards your purchase?
So maxing them out, and I'm gonna throw number 3 in there as well because they kind of go
but then
hand in hand.
I can't think of anything else.
Yeah. Well,
so now you're changing my list to 5?
Maybe you should have done more homework. You know what I mean? But anyways, so maxing out credit cards and missing payments on credit cards or loans. that you
Which
have.
was number 3, by the way, to miss payments on your cards.
Yeah, there
Whatever.
we go.
So this is 2 and 3. Go
So
ahead.
yeah, so 2 and 3 together. So if you're gonna miss, if you max out your credit cards, what's gonna happen is it's gonna drop your credit score. And the reason that is because the closer that your balance is to what your high credit or your credit availability, credit limit, so on and so forth, whatever that is, the closer that you get to it, the lower your scores get. And the reason that the credit companies do that is to deter other people from granting you credit. Now, not only is that gonna happen, but now your monthly payment on that credit card is going to go up. Now, granted, if you're in an installment loan, like a car loan or whatever, that doesn't matter, but you're also not going to raise your balance on that. That would be applying for a new line of credit or new loan. This now to number 3, which is missing payments. The reason you don't want to miss payments is because, once again, that's going to drop your credit score if you miss a payment. Now, there's several different lenders out there. Some lenders will pull just before they close, just to make sure that everything is copacetic and everything's cool.
And that's when the surprises would happen.
Yeah, but there's other lenders that don't. What I would say is don't max out the credit cards, don't miss the payments, just in case you're dealing with a lender that that is going to pull just before the closing. Because if they're going to pull just before the closing, all of a sudden you get that phone call and the deal's it goes awry or it's dead. You know what I mean? And it's not worth it.
No, not at all.
Right. It's once again, it's something very simple. Just keep status quo, keep doing what you're doing, and you should be fine.
There's no reason to change anything at that point. Just be patient, wait until after you close if you want to buy furniture or anything like that. Just wait until after the closing. I mean, the moment you leave that attorney's office, you can do whatever
you can do whatever you want. You can go and buy a boat or whatever you need to do.
Yeah.
And then the other thing is with this stuff, not missing the payments, not maxing out the credit cards, all lenders can keep credit for only a certain amount of time, because then it does expire. Some lenders are 90 days, some are 120, mattering on the lender. So once again, don't play Russian roulette with it. You know what I mean? Just pay your stuff, be cool with it. If they have to repull your credit, they repull it.
Right.
That's it.
Right. All right, so on to number 4 then, or 3, however you want to count it.
No, it's cuatro.
All right, 4. Spend your savings.
Yes.
And what I mean by that, these are the funds that you were going to use for your
Spend
down
all of
payment.
it.
Yes,
Spend it.
do
Just,
it. Do it.
go right down to
Banks
zero.
love that.
Negative money in the bank is always appreciated.
No, we need to clarify this now because
we're
so
just
obviously
messing with
joking.
you. Just kidding.
So there's I don't know how often it really happens. I mean, it seems like it's common sense, but I've seen so much happen out there that I can't rule it out just yet. You know what I mean?
Yeah, I mean, I've seen clients. I've had clients that'll come in and they have, say, $10,000 in their account, and during the course of the application, you have to have updated bank statements. I have to see money go, the money coming out of your account that went towards the deposit, so on and so forth. And I'll get a bank statement, and all of a sudden they only have $5,000 left in the account, and I'm like, "Where'd all your money go?" And they're like, "Oh, well, I showed you I had it, and my kid needed to borrow $3,000. Their dog got sick and needed an operation." Okay, well, that's great, but you're buying a house, and that is paramount. So I love the dog, and I'm sure your kid's great, but
so mad at you, Szeszen. You have no idea how many viewers are
going to be mad at me. But here's the thing: is you could go and get a care. No, but you could go get a care card and go get a loan from the vet, and they'll
But
take
did you not hear number 1 and 2? Take out loans.
Your kid could take out the loan, not you.
Oh yeah, we don't care about the kid.
It's your kid's dog. It's not your kid, right? It's not your kid, nor is it your dog, right?
This whole thing just went downhill.
I
love it. I love it.
It is what it is, right? But so yeah, don't spend your savings. Make sure that it's in the bank. I mean, and in fact, try and continue to build your savings, because the more money you have, there are sometimes incidentals at the closing, like you find out there's an oil adjustment, or maybe the taxes. Sometimes you will find the person that you're buying the house from was elderly, and they were getting a tax break from the town, and so the realtor didn't know that was a discrepancy, because they saw what the taxes were, per the town. They didn't know that there was a discount. Now all of a sudden, instead of the taxes being, say, $6,000 a year, it's $72,000. Well, now that means that you're going to need more money at closing, because you have to cover your escrows. So there's little incidentals here and there.
It's a no-brainer. What's the worst that can happen? You're closing, you close, and you have leftover money. That's perfect.
Yeah, that's a perfect situation.
Absolutely. So we'll go on to number 5, which is change jobs.
Yes.
Now, obviously, I mean, explain what we mean by that, because it's not literally change jobs. I mean, you could switch jobs if you wanted to.
Absolutely.
As long as you're within the same industry.
Not necessarily. When it comes down to being in the same industry, if you're, say, a car salesman and you're making commission or bonuses or anything like that, any business that makes commission, bonuses, or anything like that,
right.
You want to try and stay with the same job if you if you are changing jobs. Just because you've built a rapport, you could show that you make this money, so on and so forth. If you go from a commission-based job to a W-2 paid job and you're making the same or more money, that's totally cool. The flip side doesn't work. If you go from making, a W-2 job, like let's just say, I don't know, you're a manager at Starbucks, right? And you're working there and you make whatever thousands of dollars a year, and then you decide that you want to
become a realtor and make $5,000 a year.
Why? I thought this wasn't about you. It's your biography. No, but here's the thing: so now if you go to straight commission, I can't I need 2 years of calculation, so that will kill the deal for you. But changing jobs, like let's say you're, I don't know, you're a receptionist at I don't know, a hotel, and then you're gonna go and you're gonna work at, you're gonna become a receptionist for a doctor's office. As long as you're making the same money or more in your W-2, that's totally cool. I mean, especially if it's gonna save you mental anguish. Okay.
So on to the last one, okay?
This is it. No more. I gotta get out of here.
I can't even think of any more.
I can't.
So the last one is gonna deposit large amounts of money into your bank account.
Yeah.
That you cannot prove where it came from.
Yeah.
Is that right?
So all deposits. I mean, for the most part, when you're doing a conventional loan, and not to get too convoluted or confusing in this sense, just make sure that you don't have any large deposits. I mean, if you're doing an FHA loan, I have to do what's called source and seasoning of it. If you do a conventional loan, I just have to source it. But you don't want to put large deposits into your account. The reason is because the underwriter, the lenders have to see where that money came from. So I mean, if you're getting a gift, say from mom, dad, brother, sister, whatever, for a down payment, that's totally fine. But I'm gonna have to see where it came from.
So their bank statement.
I'm going to see their bank statement. I need to see the check that they wrote you, or if it was wired or something, I need to see the wire transmittal. And then I'm also going to have to see your account with that money posted, and have a gift letter, which is a standard letter that any lender has. That it basically, it's like fill in the blank, and you sign the bottom, put your info, and that's it.
Now we don't mean just any deposit, right? I mean, if let's say if you're like 1099, you get paid on commissions. And you've always gotten paid commission. I mean, you can track it. You can prove it. You can just send out.
I can prove that. Another good one, since it's it's almost March. Tax returns. Boom. So tax returns, a lot of people are like, oh, well, there's going to be I'm getting $5,000 back, but you can't see where it came from. No, that's your money. You saved it because you overpaid the government. So they were basically the bank, and we're saving the money, and I'm going to see it come into your account, say IRS tax return. So that's okay.
So we're mainly referring to money that was under the mattress.
Yep, mattress money or sock drawer money or whatever you want to call it. Yeah, you just can't.
Mattress money.
You like the mattress
bed bug money.
Huh? Bed bugs.
I love it. We should call it that.
There you go. Okay, whatever.
So, I mean, any other things that you can think of that people that you see? I'm sure there's a lot of them.
There's a lot of little things here and there that people do, but I mean, for the most part, I think we covered everything. As far as like your 6 major.
Well, 5 now.
Because we mixed the 3 and 4, or the 2 and 3 together. Yeah, it is what it is. But basically, those are your biggest problems, the faux pas, so on and so forth, however you want to say it. I think that those pretty much touch upon.
And honestly, whenever you're in doubt, it's a big purchase. Buying a house is not easy. There's a lot to it. So whenever you have any doubts, just call your realtor, call your lender, call your attorney.
Absolutely.
Ask before you do anything, because sometimes there's no way back. I mean, there's nothing you can really do about it. So it's not worth the risk. Yeah. And that's why I wanted to put out these videos. That's why I want to do things like that, in order to be able to educate the people and figure out,
Absolutely.
What can we do to actually get to the closing table, because that's the whole point.
Well, yeah, and by not doing these things, it's going to make everything move just smoother, a little easier. I mean, it's a stressful time when you're buying a house to begin with. I mean, there's a lot going on, moving in or out of one place into another place, setting up, closing. I mean, we know how it runs, and a lot of people that are involved, it's their first time, so they don't even know what to expect. So by staying away from these 6 issues, it's just going to make things that much better for you. And of course, I mean, if you're dealing with me, you can always give me a call. I'm available 7 days a week. So give me a call and I'll answer all your questions.
Well, thanks for joining me today.
Thank you, brother.
And if you guys have any questions, just give either one of us a call and we'd love to help you. Thanks, guys.
Have a good one.